Decent sell-off in the stock market today from the coronavirus news and maybe some other news coming out. But let's take a look at the portfolios, how they did this week in this sell-off. The stock indexes had some drawdowns while some of the commodity market trading did well. Stock index portfolio, look at the 19 system version, and it pulled back from its equity peaks. It's in a $5,300 drawdown. Thursday and Friday was a drawdown, and it is still up 6,000 on the month. And it had this, you see where the drawdown curve is. This is off of an equity peak. This represents when it made an equity peak right here, and this represents a drawdown. And as you can see, it draws back to these levels all the time. So those are normal drawdowns. You see lots of fast spikes down and normal drawdowns. And so that was the 19 system stock index portfolio. Has a worst case drawdown of 23,415, and it's currently in a $5,300 drawdown after a nice month so far. And so it's been up over 10K, and now it's pulled back some. Normal ebbs and flows in portfolio trading. Stock index portfolio 2020 38 strategies. Let's take a look at this. It has a $11,000 or almost $12,000 drawdown. Worst case drawdown is $46,000. Trading 38 different algos, so $10,000 drawdown is very normal when you're trading that many contracts, that many strategies at once. It is up 2,700. It had a more significant pullback. It is more aggressive, trading more stock index strategies. And you see where this pullback is. It happens all the time as well. And you see the worst case, as we talked about, the worst case drawdown is 46K here. And you see these bigger dips that can happen here. But you see these spike downs all the time. This is a really fast spike down to the nearly the 35K level. And so this was a equity peak here earlier this month, and then an 11K drawdown, which very, very regular. And so that's the stock index portfolio 38 system version. We're going to look at the trades here in a minute. I want to show you where we are in the portfolio. 200K portfolio did well, and let's update it here. Takes a minute. And you see it's in a $2,600 drawdown after being at an equity peak. It's a combination of the 19 system stock index portfolio and some commodity markets. And so it's at this level of drawdown right here, I think we said 2,700. And so it's at that level right there after being at an equity peak up here. And it is up on the month as well. Let's see, up 93.95. So it's faring pretty well, holding gains in there. And so we'll look at some of the trades here in a minute. Let's look at the 25K portfolio, or the liquid day trade portfolio. We added these last two officially to the All Strategy Access. It's in a $1,000 drawdown, roughly worst case drawdown of about 40K, and it only uses day trade strategies. So it's up 5,700 on the month, and you see the drawdown here, very small on this drawdown curve chart, and some of the bigger drawdowns happened back in the 2010 time frame for this setup. So that's the liquid day trade portfolio. We trade the more liquid markets. We don't include markets like RBOB, and we only trade during the day. So the 25 to 50K portfolio for 2020, it's at an equity peak actually this week. So it had some nice trading today, and it is up on the month, 48.75. Really good returns for a 25 to 50K account. And you see nice drawdown curve sitting right up there at equity peaks. Nice trading day today for the 25 to 50K portfolio. And we have the 2019 portfolios right here. So the 25K portfolio from 2019 is in a $2,700 drawdown. It is also up a little bit on the month, $1,900. We recommended trading, converting to the 2020 portfolio in December. So if you have this portfolio, be sure to do that or get the files from us. Stock index portfolio 2019, $6,700 drawdown, and it is up 8,000 on the month. It was leading on the month actually. The stock index portfolio from 2019 was leading. Now the 200K portfolio is the one that is leading. So the 200K portfolio for 2020. The 2019 200K portfolio is in a $4,000 drawdown. It's up 3,700 on the month after having a nice run up off the lows. It's kind of been in a longer term drawdown, and so we've modified the 200K to be the current 200K 2020 portfolio that you saw there. That has more It has more rapid returns, the more cyclical drawdowns. If you look at the drawdown curve here, we want to try to eliminate these wider drawdowns like this that tend to happen. These are wide. Let's look at the 2020 version of this, and you'll see the drawdown curve differences. We've already looked at the 2020 version of it, but we're going to look at it again right here. And as we go down, you see there are some wide drawdowns, but there's more cyclical returns to zero drawdown and equity peaks. So you see there's a wide one, but it's pretty fast. It's pretty fast up and down action, normal ebbs and flows. And so probably the best overall portfolio right now is the 200K portfolio. So if you have, 136K or more, you can trade this portfolio, and you can probably trade it with 100 to 125 actually. So let's see, what else do we have? We have the let's take a look at the all 74 strategies. What if you traded all 74 strategies? You're in a $7,000 drawdown out of a $37,000 drawdown. It's interesting that you can trade all the strategies at a smaller drawdown than some of the portfolios that don't have all the strategies. But it's up 13,000 on the month, and it's having this normal drawdown like most all the other portfolios are having. The 25 to 50K is the exception. The 200K is doing pretty good, and the stock index portfolio with 19 systems is doing pretty good. And this one is just this normal. I mean, this is just definitely, it's just a blip, normal drawdown. So we like to talk about what's normal. It helps you to understand what to expect. It's a roadmap like we talked about in our webinar earlier this week. Let's look at the trades on the week, and we'll go over Cobra 3. Cobra 3, these are some of the latest trades. This is E-mini S&P. Caught the sell-off today. Sharp sell-off. Got in at a point where it would have been better to get in a little bit earlier, but the conditions weren't right based on the way this trades, and would have been better for this thing to this is always this bias to fold it upwards at the end of the day if it's down. And so not sure that was the best move for the bulls to prop it up at the end of the day. Could see some further selling on Sunday night depending on what happens with the coronavirus. Hope that it does not spread, and hope that it is contained, and those that have it can find some healing, but not sure what will happen with that. So there's some uncertainty related to that. In Cobra 3, E-mini NASDAQ did a little bit better, and you see the trade on that. Tick count trend 2, E-mini S&P, got caught up in this. The VIX spiked, and so it stopped trading. This trades in the VIX is less than 15, and it was less than 15 here, then it rose above 15 and it stopped. So that was one of our counter trend strategies, taking trades on what turned out to be a trendy day. Tick count trend 2, 5-minute, also took that trade. And 60-minute breakout down minus 37.50. What other trades do we have on this chart? So this is the stock index portfolio for the 19 systems. You're actually trading 2 contracts of Cobra 3, 2 contracts of the tick count trends, and 2 contracts of the tick pulse. And so having the 2 contracts of Cobra 3 was nice. Having the 2 contracts of these was not as good. But those are the 19 strategies. And once again, Cobra 3, tick count trend 2, 1 and 5-minute, and then tick pulse. All trade 2 contracts, while the others trade 1. And then if you trade the 38 system version, you trade 1 contract of all these, and then 1 contract of all these strategies. And not sure why my chart is skewed, but here we go. I'll pull it right back up. And let's see here. Do we have all 19? I closed it down and reopened it, and so it's all skewed right now. Let me make sure we have them all. 1, 2, 3, 4, 5, 6, 7, 8, 12, 13, 14, 15, 16, 17, 18, 19. So we have all 19. Here is the ATs. The ATs did not take shorts today. 60-minute breakout lost minus 1,000. Asia 4 long lost minus 1,000, and SRCT2 NQ lost minus 825. Tick count trend 2, a little late to the party, but kind of broke even on the day. Stopped out and re-entered. A little late to the party there. Should have got short earlier. Tick count, SR counter trend 2V2, 5M, and 1M both lost on the day, minus 825. I'm glad that all SRCTs did not trade today, and so that's the benefit of the diversity. And some of these are more selective than others, and they didn't all trade today. So there's sometimes when we've had all of them trade and it's profitable, and then other times when they don't all trade. And today was a good day that they didn't all trade, because we're buying this pullback until it ends. I said we take long trades until it ends, and then when the trend reverses or there's some volatility, we'll go through a losing streak and it'll be volatile, and that's what happened today. And we also talked about earlier in our webinar how 10K drawdowns can be good for entering in, adding contracts. So if you're looking to add contracts, you use these drawdowns to add to positions. So if you're up by the amount you want to be up, if you up a full account size, and you're after a 10K drawdown, if you're up an additional full account size or up a full drawdown size or whatever your aggressive parameters are, then you can add contracts. So that gives you the opportunity, because this is an $11,000 drawdown. You could wait for more to add, but if you're looking to start one of these portfolios, you lease the portfolio, you set it up on your computer, you watch it in sim mode, and then in most cases you're hoping for it to go through a drawdown, so that when it gets to a drawdown point, you start. You're not buying an equity peak, because sometimes when you get to an equity peak, it pulls back. Other times equity peaks keep running. So that's one thing. It's kind of a guess. If you look at the 200K portfolio in 2018, it made 53,000 in February, 39,000 in March, and 28,000 in April on those big sell-offs. And so those are some nice 3-month periods that we enjoy. And then October once again, and then December. And so you can have those time periods where you can enjoy those runs. And then the problem, if you're waiting for a drawdown, you will miss those if you're not already in it. So that's one thing to also consider. It's kind of a catch-22. You know for sure that your risk to worst case drawdown is smaller if you wait for a little bit of a drawdown. But sometimes waiting, if it's in a peg in an equity peak, can be tricky. So let's look at the other trades on the week. Asia Gold 4, we have a new version of this, but in the all 74 strategies, it's included. So you get a double dose of this same trade, plus 1,500 on that. Got out near the highs. Cobra Euro 4 minus 100. SR counter trend crude oil 2 plus $500 hit its profit target. Grains day trader 3 plus 137.50. Cobra Crude plus 115 on the conservative and aggressive. Some of these shorts are a little late to the party, as you can see here. These trends are really starting right here at 2:30 a.m. when Europe opens, and it gets going here at 8:15 a.m. and we're getting in, towards the end of the trend. So historically, though, it works better to do it like this during this time frame. Natural gas held a short over the weekend. SR counter trend 3 188.9. It's at 118.63 plus 260 open position profit. It's hard to hold these sometimes over the weekend, but this thing looks so weak. Would not be surprised to see a gap down unless there's some news that makes it go gap up. And so here's Asia Gold 4 2020 long. It also hit its $1,500 profit target. And then, okay, we're missing this window, but there was no trade here in SR counter trend 2V2 1M silver. I'll add that back here. But the crude oil trades were, you see plus 600 here and plus 600 here on SR counter trend 2V2M. And those are in the liquid day trade. Can be added to the 200K. We showed how you can add these 12 strategies to the 200K as well. So a lot of information, a lot of perspective. I love the portfolio calculator because it gives a lot of perspective on what to expect. You get two losing days like today. If you're just focused on the stock index portfolios, and you were at an equity peak, and then all of a sudden you're down 12K, and if you haven't experienced that before, it seems like a big drawdown, but it's a normal drawdown. So you have to look at these parameters. The worst losing day is 14,000, and these days were both around 5,000 and 6,000 if you just traded the stock index portfolio. So that's some perspective, and we're not looking at you were up over 12,000 on the month, and now you're up 2,700. We're not looking at that as much as the cycles of drawdowns. So look at the cycles of drawdown. Does that look like a normal cycle of drawdown? It does. And so, you know, you have to do different things if you're just trying to lock in profits each month. If you do that, you can do that. You'll be in a situation where you're trying to time the portfolios, getting out on run-ups and waiting for drawdowns to get back in. You can do that. That's more conservative. You won't make as much money. You won't have as much volatility in your account, but that's another thing you could potentially do. So that's the update, the week update in trading, the portfolio calculator update for January the 24th, 2020.